This is a 5-year chart of Bitcoin. Bitcoin is no longer $20,000 or $40,000. It's now reclaiming its throne at $60,000. It's up 280% since the beginning of 2024. So what is actually going on? What's causing this big of a movement for Bitcoin? So on January 11th, 2024, the US Securities and Exchange Commission, SEC, approved 11 spot Bitcoin ETFs. This chart shows the Bitcoin price, and it highlights the rally post the ETF launch on January 11th. Okay, it has been a significant driver behind Bitcoin's recent price rally from 40K to 60K in a matter of weeks. The launch of those Bitcoin ETFs has not only legitimized cryptocurrency in the eyes of traditional investors, it's a big deal to have the Bitcoin ETF to be approved by the SEC. It attracts a flood of new capital into the market. This chart shows Bitcoin ETF inflow versus Grayscale Bitcoin Trust outflow. So Grayscale Bitcoin Trust is down here, and all the ETFs are up here. So even though we see a over $8,000 million worth of outflow from Grayscale Bitcoin Trust, which is not a ETF by the way, but we still see a overall net inflow of $7,488 million into the Bitcoin through the use of the newly issued ETFs. So one may ask, why is money exiting the Grayscale Bitcoin Trust, but instead entering the Bitcoin ETF since the launch of the Bitcoin ETF? It's because funds or products like Grayscale Bitcoin Trust with the ticker symbol GBTC, it functions similarly to an ETF, but it's not officially categorized as ETF. They operate as a trust that holds ETF, and its shares are traded on the stock market. However, unlike a true ETF, the shares could be trading at a significant premium or discount to the actual underlying Bitcoin value because the trust does not always issue new shares or redeem them, right, in line with the demand, like how ETF is. So in simple terms, it behaves like an ETF, but it's not a true ETF, so it's lacking the mechanism to make it efficient. So the price is inefficient and it have intrinsic flaws. This chart is showing us the total asset value of Bitcoin ETFs over time, and we can see the explosion in growth of asset for the Bitcoin ETF. For all the Bitcoin ETFs in US, it underscores the immense market appetite for cryptocurrency through, now we call this the SEC approved legal ETF channel. And what's very funny that's being observed by many people is some Wall Street's shifting narratives on the Bitcoin since the launch of the ETF. Celebrities on Wall Street, including figures like Jamie Dimon of JP Morgan Chase, Charlie Munger of Berkshire Hathaway, or Larry Fink of BlackRock, they all have historically dismissed Bitcoin, seeing it as a threat to the traditional financial models. Their skepticism against Bitcoin, I think, is rooted in the potential for the Bitcoin to divert investments away from stocks and bond, right? And think about it. If you are the CEO of a traditional bank like JP Morgan, of course you would be challenging Bitcoin because Bitcoin is claiming to be the next financial system that's replacing your traditional business, right? So they're making those statements to protect. It's a protective stance towards their own institutions or interest. But I think what's very interesting is to observe Larry Fink's shift in his views towards Bitcoin before and after the launch of the ETF. Before the launch, he used to label Bitcoin as index of money laundering. after BlackRock, which is his institution, launched the Bitcoin, Larry is now praising Bitcoin for digitizing gold. This shift or evolution of his stance on Bitcoin underscore this notion that the narratives by those celebrities on Wall Street are driven by personal or their institution's interest. With the launch of the ETF, people may ask, is Bitcoin still decentralized? Well, Bitcoin was originally designed by Satoshi Nakamoto as a decentralized alternative to the traditional finance. Now, Bitcoin's integration into the institutional investment through the ETFs has sparked a lot of debate on this. Critics are viewing this as a move away from decentralization, suggesting that the institutional involvement centralizes Bitcoin, because on the surface it does look like the owner or the institutions are becoming larger and larger owner of the Bitcoins outstanding. However, I think this perspective misses a crucial point. That is, the institutional investments facilitated by the Bitcoin ETFs actually democratize the access of Bitcoin. Right? Before having the ETFs, people have to open an account at a crypto exchange, right? And then it wasn't even recognized by the SEC. So a lot of people are like, I'm not going to do that. Too much work and it's too risky. Now, think about it. The largest financial product provider, BlackRock, is producing a Bitcoin ETF. It makes people think it's now a safer way. At least it does look like a safer way to invest in the Bitcoin, and of course a more convenient way. So it definitely democratized the access to Bitcoin for the public. And of course, in exchange, the large financial institutions, they collect some fees for the services they provide. They have to actually hold the Bitcoin themselves, and there are costs associated with providing this service. So overall, I think it's actually helping out on the decentralization of the Bitcoin, because the money in this ETF is not owned by the financial institution themselves. It's owned by the people who invested in the ETF. Now, as a conclusion of the video, should retail investors be rushing into the ETF? Well, before buying or investing in anything, it's important to understand the valuation of Bitcoin or the asset you're about to invest in. Okay? Now, the supporter of Bitcoin think it's a digital gold. It's a store of value, a replacement of fiat currency. Not now, but it's heading towards that way. But the opposer think Bitcoin is way too volatile to do that. Right? If you don't want to store your value into something that volatile. Someday you're a millionaire, some days you don't have nothing. You're almost homeless, right? That's not good. And the supporter of the Bitcoin think Bitcoin will one day will be a dominant financial system or a transaction system as opposed to the traditional system. The opposer of the Bitcoin think the decentralized nature of the Bitcoin is making it to be widely used in the illegal activity. Even though people say Bitcoin transactions are tracked in the blockchain, of course, but there's still a disconnect between the virtual world and the reality. In the shadow exchanges, you don't need to show your real world identity to open a digital wallet. You can just trade it through the shadow exchanges, and it's almost impossible to track those activities. But overall, the fact that the SEC is legalizing 11 Bitcoin ETFs is definitely considered a move that helps address some of the issues of lacking of regulatory and oversights. So at the end of the day, Bitcoin is worth whatever money people are willing to pay for it. I don't know if the price of Bitcoin is going to continue to go up or down, but all I know is it's a pretty speculative asset and the price changes dramatically. I think if a person decides to invest in Bitcoin, he should only invest the amount of money he or she is willing to lose due to this speculative nature. And I noticed there's a lot of people on YouTube start talking about 10x your money using Bitcoin or cryptocurrency. But this happens every time when the market makes big moves. Last time this happened is when post-COVID in 2020, when Federal Reserve stuff starts to flood the market with money and everything was growing. All the growth stocks were going crazy. There was a gazillion channel on YouTube talking about 10x your money buying crap stocks. So you need to be very careful about the sales pitch you hear online. I think putting all eggs in one basket on Bitcoin is definitely way too risky for anyone.